Robert Vinall is a value investor and the founder of RV Capital, an investment firm based in Switzerland. He manages around $200 million, but his performance in the last year was really poor, with around minus 30%. So why should we analyze his portfolio? Well, there are two reasons. First of all, he had some impressive results through the years and only recently started to struggle, so he knows a thing or two about investing. And secondly, if we manage to learn from the mistakes of others, then hopefully we will not have to learn from our own mistakes. So, thanks to 13F filings, we know all his investments in the US, and he is a very concentrated investor. He has only 6 stocks, and they are Credit Acceptance Corporation, Salesforce, Wix, Meta Platforms, Carvana, and Trupanion. So let's go through those investments, see how they changed through the years, and hopefully we can find some patterns to clone or to avoid. Let's start with the smallest position, Trupanion. Trupanion is a pet insurance provider that offers and administers cat and dog insurance in the United States, Canada, Australia, and Puerto Rico. It has a market cap of $2.4 billion. Unfortunately, we don't know when Vinall bought this company for the first time, but he sold it completely in Q1 2021. And he probably made a really nice profit on this position when we look at the price difference. And just 3 quarters later, he bought some shares of it again, but this time it is a very small investment compared to the first one. It seems that he believes that he can repeat the same success with this company again, but now on a much smaller scale. We will see. His second smallest investment is Carvana. Carvana is an online used car retailer. The company is the fastest growing online used car dealer in the United States and is known for its multi-story car vending machines. It has a market cap of $2.2 billion. Vinall bought it for the first time in Q1 2020 and sold it just half a year later, probably getting around 300 or 400% return with this investment. But after he sold, the price just kept on going up. In August 2021, shares were selling for over $360. And just as with Trupanion, he decided to invest in this company again. But this time, he made this investment really big. At some point, it was over 18% of the portfolio, and even though he was adding to this position, it is now only 1.7%. And that's because in December 2022 it went down to $4, and now we are around $11 mark. So this is the main reason why Robert Vinall has such poor results in the last year or so. With all the problems and scandals concerning Carvana, the stock just got crushed. And it seems that Vinall got too optimistic. The past success made him too sure of the investment and he lost in a big way. It seems unlikely that Carvana will go up to the $300 point in the foreseeable future. But I may be wrong, we will see. His next position is Meta Platforms. We all know what Meta is and what it does, that they own Facebook, Instagram, and WhatsApp, among other products and services. And I also made a video analyzing Meta, so if you want to know more, then check it out after watching this video. Meta currently has a market cap of $448 billion. Unfortunately, we don't have information about when Vinall bought this stock, but we see that he's not investing like Charlie Munger or Guy Spear. He does not buy and hold. He makes constant corrections to his stocks. What is interesting is that he did not add to this position in the last quarter, even though the price is down. But we also don't know how much cash he has. So he may be fully invested, or his conviction in Meta may not be strong enough. Okay, so now let's take a look at his third biggest position. Wix. Wix is an Israeli software company that provides cloud-based web development services. It allows users to create websites and mobile sites through the use of online drag and drop tools. It has a market cap of $4.9 billion. And if you want to know more about Wix, I also made a video analyzing this company, so you can find the link in the description. Vinall bought his first shares of Wix in Q4 2019, and just as with Meta, he was constantly making corrections to this investment. And when the price began to go down at the end of 2021 and the beginning of 2022, he bought a lot of shares. But now that the price is around $75 mark, he's not buying anymore. So it is a similar story to Meta. He may just not have enough cash to make this investment even bigger. But Wix at the current time is not a positive investment for Vinall. At the beginning of 2021, it was almost 27% of his portfolio. And even though he was buying more shares, it is currently only 17.7%. And his second biggest position is Salesforce. Salesforce is an American cloud-based software company. It provides software and applications focused on sales, customer service, e-commerce, and analytics. It has a market cap of $165 billion. Vinall reduced this position this quarter by just over 0.6%, so really nothing major. And it is actually the only move he made this quarter, at least in the US part of his portfolio. He bought Salesforce in Q1 2021 for around $211, and at the end of Q4 2022, the price was around $132, so another loss. But probably nothing that could not be turned around in the long term. We also see some corrections, but unfortunately this time he's buying when the price is going up and selling when it is going down. So it is really interesting what he will do with this investment and why he is taking the losses. And now we get to the biggest position of his portfolio. Credit Acceptance Corporation. Credit Acceptance Corporation is providing car loans and other related financial products. It has a market cap of $6 billion. As with some other investments, unfortunately, we only have data from Q4 2018, so we don't know when he bought this company and at what price. But this time we see that the corrections he is making almost every quarter are spot on. When the price goes down, he's buying. When it goes up, he's selling. And he's doing that for a long time, so no wonder that it is his biggest position with 36.8% of the portfolio. So it is a really interesting portfolio. Half of it is in finance due to Credit Acceptance Corporation, and the other half is packed with innovating companies at the different stage of development. So basically, one half is more stable and predictable, and the other is a bet on the future. I think that is an interesting mix. Though I am not a fan of constant changes and corrections to the portfolio, I have a feeling that in some cases it disturbs the compounding effect. It is really interesting to look at a struggling portfolio, and I believe we can learn a lot when we see good and poor decisions so close to each other. Thanks for watching, and bye-bye.